Welcome back. Well, let's quickly shift the focus to the commodity markets now. We have Manisha in the house with the latest. Manisha, so what's the big headline?
Well, it is gold because, all of last year we kept talking about on how $3,000 an ounce perhaps was in the making. But this year, not just that 3,000 has been broken, but we've seen 3,038 as an all-time high in the New York session yesterday. This is a chart that tells you on how quickly the gold prices have started to move. 1st of January in this year itself, we started with 2,650 and we're standing at 3,038 right now. So that has been a $400 per ounce of a jump up coming in there. 1st of Jan 2024 was 2,045. So when you look at from those kind of levels, we're up by $1,000 an ounce in a matter of perhaps 14, 16 months there. And as you can see, it's been a constant gaining. There's been one linear line of bullishness that we've seen in case of gold prices from 1795 in 2022 to 1856 to 2045 and 3038 right now. And when you look at the markets, we are looking at very, very strong fundamentals continuing in case of gold with an expectation that we could be going higher from here on. If you look at the fundamentals itself, there has been escalation in tensions in West Asia. That clearly has been the major supportive factor. The safe haven buying, the portfolio diversification and new investors coming into gold has been the reason that you have seen the prices continue to gain up. The trade tariff impact on economies is seen to be slowing many of these economies, in turn supportive of the market. Also, all the US economic data that we've seen come in the last 2 or 3 days, whether it has been about retail sales, home building, inflation numbers, all of that leads to safe haven buying and slowing of economy in the US markets there. Also, there have been strong inflows in gold-backed ETFs, so the investment demand has been strong and the central bank buying has been on a higher side as well. Whether it has been about Asia, where you've seen India, China buying stronger, or the Middle East or even the US markets there, the buying clearly has been on the investment side there. The dollar index trading at a 5-month lows has been yet another reason that we have seen all of the safe haven buying actually come in for gold. The outlook for 2025 from here on is going to be quite interesting. 3,000 was a level that most banks said you would be looking at being achieved by end of this year. We've already done that in the first quarter itself. So there is a revision in prices now. An average of $3,000 is what you could see is what the most banks are saying, but there's a revision that's come in the previous week itself. So ANZ talks about 3,100 to 3,200 in the next 6 months as well. De Beer Group talks about 3,300. $3,100 an ounce is what Goldman Sachs and BNP Paribas also have put out as an all-time high going forward into the markets there. And this just about continues. I think the most bearish clearly is UBS, where they anticipate the prices to see some correction, which almost everybody does. But 3,000 is what BofA is putting at as an average price for the rest of this year. 3,200 from Citi, and Macquarie being the most bullish anticipates $3,500 an ounce in case of gold prices in coming months.
All right, Manisha, thank you very much. All that glitters is gold, I think definitely. Thank you very much for that. Well,